Today is the big day. The Fed actually starts to cut rates. At least that's what's expected. We're going to take a look and see what the expectation is shaping up to be and also where the markets are. So here is trading economics. Fed comes out 2 o'clock. We actually see if they decide to do the 50 basis point cut or 25. And then also the summary of economic projections coming out. That's probably the larger of the two catalysts. And then the speech itself from Jerome Powell, the press conference, I should say, at 2:30. Going to be absolutely enormous. Expect a lot of market volatility around that time. When we look at the CME Fed Watch tool, 63% chance of getting that 50 basis point cut. Coming up here in September, 37% chance for the 25 basis point cut. And like I said, I think the summary of economic projections is the larger of the two catalysts. So that's something that I'm watching out for. I gave that commentary in my video yesterday. So if you want to see that, you can go ahead and watch that video from yesterday and you'll see what I have to say about it. And I'll tell you what, it's going to be exciting. So Goldilocks, or will we get signs of recession instead? I think the Fed, man, it's going to be quite a time in the markets. You'll know immediately how the market's pricing it in. I would say by the end of the trading day, we'll see where it goes from there. So with that said, here is SPY, and you can see we pretty much have a triple top going on right here. At the very least, a double top off these very top peak values that you have. And I would say that I'm a little bit surprised the market's not a little bit more nervous going into this for that summary, but we'll see that volatility coming in. So we're either going to break to new all-time highs or we're going to start dipping back down towards this 50-day that you see right here. And if we head back down to the 50, we're probably going to cross through it. If we go to new all-time highs, well, let's put the technicals up there and you can see what I have going on for that. So let me stretch that out and we're going to narrow it down to the view that you have here. So I said we can move this price out of the way. Watch this trend line for rejection. We opened up there. We actually were able to cross through the top line for rejection yesterday. And then we closed back down below this trend line off the previous peaks that we saw. And you can see we really dropped down below that. We're able to close up above this line of resistance. We're going to mark that for support now instead. There we go. And this is that precarious spot that we find ourselves in for the Fed meeting. The market is always going to line itself up for these times when it really looks indecisive for what exactly is to come next, so it's ready for either direction, either move. I think either way, it's going to be a big move for us. So I am cautious on this. I have my short hedges out. I have my long plays in place. You can see those over at the Discord available through the Patreon. You can see my buys and sells, and you guys can also learn about technical analysis using the trading course down in the description. Let's move on to the Qs to see what's going on there. So QQQ tracking the NASDAQ 100. In the pre-market hours today, you can also see some of the price that I have on here. In the pre-market hours, where are we at? We're actually a little bit north. We're right around this red line of resistance that I have for you, right around 474 to 475. It's actually 474.53 right now as I record this in the pre-market hours. And we'll see if we get that push up to 480. As a matter of fact, I think that we're able to really clear these trend lines that I have across the top. I think we're going to be pushing up through that resistance pretty readily. If instead we sell down through this, the downward trajectory that we have on these, you can see the prices I have to the downside on this as well. The 200 days all the way down here at 444. We are currently above the 50-day at about 471, but not by much. We do want to stay up above that to stay bullish. Dropping down below that's probably going to be near-term bearish. The next big catalyst after that's probably the jobs report that we get, and it really depends on what the summary of economic projections puts out today to give that flavor. And then also the election coming up is the big catalyst about a month after that yet. So that's what we need to look for the Qs. Let's go on to IWM. In this one, yesterday, we actually pushed up again above the trend line and then sold back down below it to close back in this area of resistance that I have here. You can see that rejection that we have up to the top side of this, and we closed right in the pretty smack dab in the middle of the resistance band that I have on here. So this trend line again is off the most recent peaks that we got a bit of a rejection. We'll see which way that goes. If the Fed signals more recessionary, expect that to be a lot of downward pressure on the Russell 2000 stocks tracked by IWM. If instead they signal Goldilocks, we could experience at least some temporary levity coming for Russell 2000 stocks. I still don't know that we're ready to go to the moon on this. I think that there's going to be some downward pressure yet before we get the true moment where we get that next big skyrocket for this one. I think we have a little bit more settling first. And then after that settling happens, we establish a new bottom on this thing, or a more recent bottom, I should say. Then I think we could possibly see that to the moon scenario, unless we hit some sort of recessionary period that totally wrecks the small caps. So just a little bit of commentary that's out there. In the meantime, new all-time highs. I do think as long as we're playing that Goldilocks scenario, I think we have new all-time highs coming for it, which is like way up here. And we are still, there you go, you got the all-time high marked. We are still in a really good spot for potentially the market buying into that Goldilocks scenario some more. Even if the economy itself isn't necessarily reflecting that, we still might see it in the markets. NVIDIA, where's NVIDIA? NVIDIA is playing along with this trend line that I drew in yesterday, and you can see the support area still playing out for us. We need to get up above that for more bullish movement, and that is a very temporary movement that we have at the time. You can see the support areas that I have going down along that, along with the prices and the resistances to the top side. For Tesla, we're still in that rising wedge pattern for Tesla, still getting rejected right around that 233 number that you can see for my second price target that's in here. And this resistance that we have, yeah, we broke up above it, got rejected up there, closed down below it in the pre-market hours, still down below that value. And that's causing us a fair amount of trouble right now. You can see that we can keep on getting that selling pressure right around that price. If we're able to close up above it, then we could start to see that third price target. If we can't close above it on a candle, it's going to make it tough to get price target 3. Really, the Fed commentary can be the thing that pushes us up to 242 and has us messing around with these higher resistance values, or it can be the thing that pushes us down out of this rising wedge pattern leading up to the election to see which side things are going to go to, and then we'll talk about end of year as that timing comes along. Momentum on Tesla is looking bullish on a daily basis. Over to TMF. TMF having a bit of a rough go this morning. Got stopped out of my call option at a 25% gain. It was up about 40% on that play so far. Then yesterday, just ripped right back down to this support part of this. Now, mind you, retest it. If we can get back up above there, that's a good thing to break back up above this, because we are in a consolidating pattern right now for TMF. So that is most definitely worth paying attention to and worth watching, depending on what the Fed puts out for the summary of economic projections. If they show a lot more rate cuts than are currently being priced in, TMF is likely going to have a pretty strong positive reaction to that one. If they show fewer rate cuts than what's expected, that's something that could be that downward pressure that puts us right back into this consolidation that you see. Breaking to the top side so far is a bullish thing. Momentum settling down a little bit off of coming near overbought. So we'll see where that settling comes in. We'll return back down to the support with my first price target that we got, or will we be able to pop off and head up towards the second price target of 67, potentially even up to 73. And it really depends on what the Fed is signaling for us in that summary of economic projections. So guys, like I said, if you want to see my buys and sells, how I'm playing this market, talk to my community members and me over at the Discord. You can find that link for the Patreon down in the description. The Discord is available through that. You just click sign up, join the Discord, and we'd love to have you over there. And then if you guys want to learn to do technical analysis like I do and empower your trading in your portfolio, you can do that using the bread recipe available through Stockmo Academy with the technical analysis trading course linked down below. Use the code word doctor when you sign up. It's going to give you a massive savings on that one. Bread recipe, super easy to follow, very few indicators. You can set it up. You can see when the momentum is shifting in the right way that stocks could potentially, whatever stock it is, whatever ETF it is, whatever security is, looks like it's going to be on a significant uptrend. It could signal that for you. Or on a downtrend, it could signal that for you. And then you could trade accordingly off of those things. Never tells you what to buy or sell. Neither do I. Neither does Stockmo as part of Stockmo Academy there. But it is something that a lot of people are claiming, raving about the success, I should say, and also linking the images, the testimonials to go along with it, available once again in Stockmo Academy. Guys, thank you for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you in the next video.